Hello and welcome to another update video about gold. Gold is coming back a little bit deeper, but it's sort of not doing anything that would be outside of the scope of our scenarios. I'm still bullish on gold as long as we're holding 1865. The 1865 level for me is the last really reliable bullish support level at the moment that we have available that would support a rally in a third wave higher into the $2,500 region. At the moment, the question for me is, okay, of this, it was February low, of the February low, do we have a 1-2-1-2 setup and would take off from the orange support area, which goes down to 1970? If that's the case, it should really turn around shortly. Or we can count the entire move up alternatively as a 5-wave move, and this wave 1 would sit at the top of the April high. So wave 1 would actually be here. Yeah, let's take that out. And we would be in an A wave with an overshooting B wave and the C wave following now, right? So ABC structure in a wave 2, basically the alternate wave 2 here. In that scenario, support goes down to 1865. So these are the likely, these are the standard Fibonacci support zones that you can see on the chart. For the 1-2-1-2 setup, which is slightly more bullish, we have support between 1989, basically where we're now. That's the golden ratio, which might very well break if it doesn't recover now. And 1970, which is the 78.6 retracement. Going below that level will likely send us down to 1937 in the alternate wave 2 scenario, but both scenarios are basically part of the same bullish case. Okay, now looking at the subwave structure, we can argue that in each scenario anyway, this would be an A wave to the downside, the B wave to the upside, and the C wave to the downside. The question is just how deep does the C wave go? We can use the Fibonacci extension tool to get an idea, basically looking at possible Fibonacci extensions, and the 1-to-1 ratio is already broken. And actually, if you look at this, the 1.618 extension, which is another likely target, basically sits between both support zones. So again, the orange and the yellow box, they are just simply support. They are standard Fibonacci support, but we can combine that with the Fibonacci extension tool to give us Fibonacci confluence in certain areas. And the 1.618 extension is certainly a level to watch. So I would add that now. So what that means in summary is that as long as we're holding 1865, the overall focus can be on higher. There is certainly a level to watch at 1970, 1853, 1953, 1937, and then obviously it goes lower, but that would all still be part of the bullish scenario. Now, if we look at some of the indicators, so we're now on the 4-hour chart. We can see that on the 4-hour chart we're pretty much oversold, and we've run into the golden ratio, and we're in support. We're oversold, we're in support. I see a tiny bullish divergence on the 4-hour chart. Let's just compare that with the 1-hour chart. But the overall idea is that we need to be ready for further price drops until we see a first impulse to the upside and a 3-wave move down. But yeah, you can see a bullish divergence playing out on the 1-hour chart. That could indicate that we're very close here now to a low. So again, I think the mindset needs to be we go lower until we see a reaction. At the moment, I don't see any reaction. What you could use, I think there's a pretty obvious trend line here, to use that trend line as a first indication when we get a breakout, Yeah. But until then, the idea is that short term we go lower and follow the short term trend. But overall, as soon as we hit and break above that 2060 level, the April high, there is a really good chance that we are in the heart of a third wave rally that could take us to $2,500 and possibly above without any strong retracements, at least from what we see now. So that's very, very interesting. I'll keep you updated. Hope you liked the update about gold. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.